Howard Marks is a billionaire investor and co founder of Oaktree Capital Management, one of the world's largest firms specializing in distressed debt and value investing. He is best known for his contrarian investing philosophy, which involves buying when others are fearful and selling when others are overly optimistic. However, Marx emphasizes that successful contrarian investing is not about blindly opposing the crowd, but about identifying situations where market perception differs from reality. His greatest edge comes from what he calls second level thinking, looking beyond the obvious and asking whether a widely accepted view is already reflected in asset prices. Marx believes markets move through cycles driven by human emotions, such as greed and fear, creating opportunities for disciplined investors who understand investor psychology and valuation. A key lesson that shaped his career was realizing that investment success depends less on what you buy and more on the price you pay. During periods of extreme market stress, including 1998, 2001, and 2008, Oaktree capitalized on distressed assets while maintaining a strong focus on risk control. Marx argues that the greatest risk is not short-term volatility, but the permanent loss of capital, which is why he prioritizes defense, diversification, liquidity, and patience. He also believes investment decisions should be guided by fundamentals rather than emotions, and that successful contrarian investing requires the conviction to hold positions while waiting for the market to eventually recognize their true value. Howard Marks built his reputation not by picking the next hot technology stock, but by investing in distressed debt, buying the bonds and loans of companies that investors believed were headed for bankruptcy. During crises such as the Asian financial crisis, 1997 to 98, the dot-com crash, 2000 to 02, the global financial crisis, 2008 to 09, and the European debt crisis, Oaktree Capital repeatedly purchased debt from troubled companies at steep discounts when fear was at its peak. One of the firm's most successful approaches was buying bonds trading for 30 to 60 cents on the dollar and profiting when companies recovered or restructured. In 2008, while many investors were dumping assets at any price, Oaktree raised billions of dollars to acquire distressed securities, generating strong returns as markets normalized. Marx also invested heavily in real estate debt, corporate credit, and special situations where market pessimism had pushed prices far below intrinsic value. Unlike many famous investors, he rarely makes concentrated bets on individual stocks. Instead, he focuses on mispriced risk across entire credit markets. His investment philosophy is captured in a famous principle: the best opportunities appear when the majority of investors are unwilling or unable to buy. This discipline helped grow Oaktree into a firm managing hundreds of billions of dollars and earned Marks a reputation as one of the world's leading experts on market cycles, risk management, and distressed investing.